It's Tom Landry of Benchmark Real Estate. Thanks for tuning in. This is the 2021 real estate update. We're going to look back at real estate sales in Maine's largest city, Portland. We're going to compare those sales to 2020, and we're going to get into each of the individual segments of that real estate market. Before we do, I want to give you the highlights about what we're going to be talking about. In a word, 2021 shattered every conceivable record we've had in real estate from the time that we started keeping track. So it is unprecedented, it's unheard of, it's remarkable, it's shocking. It is all of those things, and we're going to get into those details as we move forward. It continued to be a seller's market. We saw that trend happen in 2020, the latter part of 2020, and that continued throughout the entirety of 2021. Next, we saw the major increases happen property value-wise and sales volume-wise in the single-family segment, and also in single families that were maybe a little less urban, ones that we consider to be in what we call off the peninsula. If you think of Portland divided by 295, anything south towards the water would be considered on the peninsula. Off the peninsula is those more suburban areas, and that's where we saw the greatest increase in value. The final things are demand and prices of luxury units in the condominium segment. Really, that was the story of 2021 when it came to condominiums. There's a lot of sales, a lot of data to sift through, but the real story was people moving here from larger metropolitan areas wanting and being able to afford units at prices that we have never seen. We saw our first ever 2 sales happen at over and well over $3 million. Finally, we're going to look at the multifamily market and the effects that rent control has had on larger buildings and the effect that rent control has not had on smaller buildings between 2 and 4 units selling again at record levels, with people probably looking for those single family alternatives and moving from away. So get ready. This is going to be a fun segment. We're going to keep it moving fast. Thank you for tuning in. Okay, in general, we're going to look back to look forward, and like any historian, the past is prologue and sometimes a predictor of what the future may hold. In this case, we're going to go back into 2020 and examine really what happened in that marketplace and why it is potentially very different from the 2021 numbers. And at the end of these segments, we're going to look at predictions for the future. So as we all know, the beginning of 2020 saw the pandemic come out in full force, and there were lockdowns, not only here in Portland, where we couldn't even list a property, show a property in any fashion except virtually. And that doesn't mean me walking through with my phone. That was I could not enter a property, and no agent could here in our biggest city. So really, for the first probably quarter or 2, we could not practice real estate, and obviously the numbers were suppressed. That was the case in any one of our other cities across the country, or major cities. But about halfway through the year, as things started to loosen up a little bit, we did see a significant increase. This is again, middle of 2020, a significant increase in people from away coming up to our small city, coming here probably because of our management of the COVID disaster, and feeling that maybe they wanted to get out of a bigger city, whether that was a second property and keeping their property in their larger city, or just leaving those cities altogether. We all have friends who we can know that story to be the case. If we look at that data and we look at what happened in the last part of 2020, that just continued all the way through the first 2 quarters of 2021 and actually escalated from there. So we saw bidding wars, we saw the type of demand that we had never seen in the past. So people offering 10, 20, 30, 50% over the asking prices, and offering things like free rent back to the sellers, no inspections, et cetera, trying to click off 5 or 6 different things that they could do besides just offering more money and besides offering cash, that they could make their buyer offer appear higher and more attractive to those sellers. So that painted the picture of the first half of 2021. And from that period, really what we saw is a leveling off of the market and values then staying stationary at a very high level, but not continuing in that upward trajectory. Maybe fueled by the cities, other major cities opening back up. Maybe fueled by the fact that, geez, those values cannot, this is not a trend that just keeps going linear, right? So when we saw that happen, another factor, obviously, would be the fact that we were on shutdown for nearly a year. And summer of last year, we certainly had people wanting to get out and enjoy the outdoors. And frustrated buyers checking out and sort of enjoying the summer, enjoying the fall vacations. So one interesting thing that happened as of the third and fourth quarter of 2021, we certainly did see sellers having to take some price drops. Now, sometimes that's indicative of people getting a little bit too aggressive and piling on. Neighbor sells for $100,000. I'm going to add 50 to that. When the demand started to soften about halfway through the year, if that was met with a seller getting too aggressive, it certainly led last year and last fall to price drops. And we looked at the data and we had seen more price drops in the last 90 days of last year than the whole rest of that year combined. So that was an interesting trend. We're going to monitor that as we head into 2022. We actually do not believe that that trend is going to continue, as we're going to see prices start to creep back up here in the spring. So 2021 versus 2022 overall, now this is looking at every segment of the real estate market here in Portland except for commercial properties. So that means single families, condos, multi-units, lots, and land. If we look at the overall sales volume, that went up 53%. If we look at the median sale prices, those jumped nearly 30%. The number of sales also increased by 21%. So the takeaways from that obviously are effects of COVID, in-migration, population increase, and every segment of the market again is having the pressure of more demand, less supply. Second segment we're going to look at is Portland single family sales. Now this is really fascinating, and we dove a little bit deeper into these numbers to tell the real story of what was happening with our single family sales. And then of course we're overlaying the rich information we get with our 30-odd agents in our firm and what I am hearing day in and day out from buyers moving here. So when we look at the total sales volume of single family home sales in Portland, they increased 24%. Now the sales volume on the peninsula, again, that area of Portland, which is 295 down to the Old Port, the East and West End, etc., sort of south of 295, that only increased by 0.7%, which is really shocking, right? The value or the amount of volume went from about 40 million up to about 40,500,000. The sales volume off the peninsula, again, these more suburban areas, a little further out, increased by 26%. So we're seeing some parity in values on and off the peninsula. Now, another interesting thing to look at is not just the volume, but the median sale prices. So the median sale price overall, single family homes in Portland, went up by 42%. From about the average home selling for $362,000 to $515,000. Now that's 1 year, a significantly more than $100,000 increase. And that's how I like to look at this. If you walk into the average house, boy, in 1 year, my house went up, the average house went up over $130,000. It's just really shocking when you think of the numbers in that fashion, right? So the other thing I looked at is I went a little bit further and I said, okay, now what about off the peninsula properties that have sold at high price points, right? So in every year prior to 2021, we have only seen 2 properties, and again, this is according to Maria's data, that have sold for $1 million or more. That's only 2, right? Last year we had 4. So we're starting to see people from away maybe saying, because of COVID, or even people from here saying, hey, I may want a little more space, I want maybe a little bit bigger house. Maybe I want a little bit of a yard. Maybe the garage is a little bit more important than it used to be. And probably, again, because of COVID, because of working from home, maybe the house has to do more. Maybe it has to have its own master suite, which I'm not sharing with other people, right? So it's leading to more renovations. It's leading to more home theaters because the theater shut down. Maybe leading towards that barbecue pit and fire pit in the backyard as well, which is much tougher to get and find in an urban area. The next segment of the market we're going to look at is condominiums. And again, this is a comparison of 2020 versus 21. And condominiums are tricky, in a word. They are very difficult to discern, hey, I'm sitting in my condominium here in Portland, and what's happened to my value? The inventory is so varied, the locations are so varied, that the numbers have to be taken with a bit of grain of salt. And as with any of these segments, I encourage you to reach out to us. We can come and talk to you about how the market's affected your particular property. But this is especially the case when you look at the numbers for condominiums. Now, we did see a median price increase in condominiums by about 11%. The median sale price went from about $423,000 up to $469,000. So not a tremendous increase, but again, you have to understand that there's condos that are put on the market and dated. Maybe there was 50 years dated and need a bunch of updates. And then you're blending those with brand new luxury units. And how do we come up with these averages and medians, right? So it's a very tough thing to take the data and translate it to you. However, one of the most fascinating parts, and we did a big segment on this over the summer, and we just followed that throughout the year. And really the story with condominiums was the higher end condominiums and what we're calling the super luxury units. Now, probably because of COVID, probably because of folks moving here from larger metropolitan areas where the equivalent condo in Manhattan or San Francisco or Chicago or LA, Seattle, etc., is going to go for a 10 times factor of what we're charging. They're coming here and they're paying dollars, which we find to be completely shocking and unfounded. But again, it's probably a bargain compared to where they're coming from. So for example, we saw our first ever 2 sales that crested over $3 million. One of them, 383 Commercial Street, unit number 706, that sold for $3.7 million. The next thing we look at is the increase in price per square foot. Now, that's kind of an interesting thing for condominium owners. You know, I live in a 400 square foot unit. I take the price per square foot and it gets me what my unit is worth, right? However, again, it really depends on exactly where, it depends on what, it depends on how updated, etc. So these numbers can be a little bit tricky, but it went up about 18%, the median price per square foot, from about $364 a square foot to last year, $432 a square foot. However, we have seen our first ever $1,500 a square foot unit selling, and that's at 166 4th Street. And last year there were 4 units that sold for $1,000 a square foot or more. Now, these are really unprecedented numbers, and when you couple that with these luxury units, and again, when we say luxury units, we're usually talking about units with incredible views, wonderful decks, elevated buildings, you know, significant amenities, garages, etc. So we're combining this high-end fit feel, and there are buyers out there that are coming in. So we expect to see many more of these types of buildings that are going to be targeting these high-end buyers. Okay, multifamilies. And what I'm calling the tale of 2 multis. Now, in Portland, Maine, we know that rent control came into effect about a year ago. And what has been the impact of that? Now, we were worried about that in the real estate community, and the numbers that we're going to see now are bore out that is founded for many of our clients and negatively affected their sales value and significantly affected their sales value in a negative way. So, but it is an interesting component of this as we dove further than just the headlines to figure out which segments of the market were most affected. So when we look at median sale price increase overall for all multifamilies from 2 units and up, we saw a 15% increase in values, in sale prices, between $585,020 to $670,000 in 2021. So again, you've got about nearly $100,000 increase if I'm an average multifamily owner, if I kept that property 1 year, right? Which is pretty darn cool. The median sale price per unit increase. So this is another way, think of that condominium owner, right? But if you think of, hey, I've got a 6-unit building, here's my average price per unit. It went from in 2020, $215,000 up to $257,000. Now, just like with any segment of the market, where you are, what you're selling, all of these things, how updated it is, has a big impact on where you are on that continuum. Are you at the $250, or you're at $300 per unit, or you're at $200 per unit? So again, reach out to us. We can help you determine exactly how your property compares versus just using blanket numbers. But what I wanted to do is take those numbers on the global sense, looking at all of them, and knowing the year that I came off from and talking with all the team members in Benchmark's team, we saw a significant difference between the values we were getting per unit for smaller buildings, these 2 to 4 unit, potentially more owner-occupied properties, than we were for the more investment style properties of that 5 or over. For example, 2 to 4 units increased, the number of units increased, the number of sales increased by 45%. The number of sales for 5 or more units increased by 20%. Still a big number, but less than half, right? So we have a lot more 2 to 4 unit sales. So if you go back to 2020 and before, so we looked at the data from 2020 all the way back from the time Maria's collected data, right? And that's probably about a 20-year window. In that time frame, there's only been 2 to 4 families that sold for $1 million or more. Last year, there were 21 units that sold in Portland, 2 to 4 units for $1 million or more. It's incredible. That represents a 425% increase, right? When you look at the sales of 5 or more, right, the numbers that sold there over $1 million, that actually decreased by 6%. So clearly, we are seeing the effects of rent control. We're seeing the effects of sellers who potentially, prior to rent control, may have owned their property for some period of time, may have kept their rents low. A new buyer going into that is not going to pay on what the potential rent is because rent control is capping that. They're paying on the current rent and knowing that those rents can only go up a little bit per year. So devastating effects of rent control on folks that owned bigger units and potentially units that were not keeping up with market rents. In closing, will these trends continue? I'm asked frequently, is this the sign of an overheated market? Is the bubble going to burst? Is the first signs of us, again, leveling off and values leveling off since the middle part of 2021? Is that indicative of or a sign of some type of a crash in this market? Personally, I think no. The trends that we are seeing in Portland and Greater Portland, from things like Fortune naming us the best place in the entire country to invest in real estate, to other things like headquarters moving here and being opened for companies like Covetras and Wex and Sun Life. Beyond that, the announcement of the Rue Institute, which is taking over the B&M facility. So you look at these job creation opportunities here and what's going to trickle off from that. You look at trends of people being able to work from anywhere, live then wherever they want. I think you're going to see continued significant demand here in Greater Portland, and especially in Portland. If we overlay on top of that the cost of purchasing property, right? And then the cost of building, and then the barriers to introduce more housing, you wind up with a situation where demand is outpacing supply. And I'm not sure what the factor is, but I would like to say 50 to 1. You have 50 more people interested in every unit that we have coming on. And we don't expect that to change. Unfortunately, what is happening, and we're going to see that probably continue, is people move more suburban and more rural. And why I say that's unfortunate is it's one thing if those folks go into more urban areas and these nodes, maybe around the center of Westbrook, the center of Biddeford and Saco, and those communities can rise up and gentrify, which is a loaded word, but improve is what we're talking about, and be prosperous like they were maybe 100 years ago. But if they move more rural and we use up more farmland and forest land, of course that's not great for our environment. So the idea of cities being able to respond and respond quickly to these trends of increased demand is so important, and the lack of that really, and the lack of that pace of change and change in zoning to allow people to build higher and build more is going to cause our prices here to continue to escalate and elevate. So when I look at 2022, I look at a very hot market. I look at repeating the past of 2021. I expect our spring market to be the strongest it has ever been, and values to continue to increase. I do expect, however, once again, the seasonality of this. So come July 4th, I think things are going to soften, then they'll pick back up again in the fall. We see no major correction. We will be looking at things like the Federal Reserve's actions and interest rates, because those can certainly have an impact. But as of right now, my forecast for 22 is very rosy, especially if you're a buyer. Very rosy, especially if you're a seller, and a bit challenging if you're a buyer. For complete information on this and more information and data than you would want me to spew on about, you can go on to benchmarkmaine.com and visit the blog page. We have also on our website broken down in each one of these segments the report that's related to that. So if you own a condominium, you can go right to your report, but find all that information at benchmarkmaine.com.